You've probably used the words bank and fintech like they mean the same thing. They don't. Or maybe you don't know what a fintech is. Not everybody does. But if you're running a business, especially as an international entrepreneur with a Wyoming LLC, that difference matters more than you think. So let's start with what these words actually mean. Fintech is just short for financial technology. It means a company that uses an app or a website to handle your money, but they're not actually a bank. Think of it like the difference between an airline and a travel booking site. The travel site has a really nice app and it's easy to book, but they don't own any planes. It's working with the actual airlines behind the scenes to get you where you need to go. A fintech works the same way with banking. Now let's get to the actual difference between the two. A real bank holds your money itself. It has something called a charter, which is basically the government's permission to operate as a bank. That charter comes from a federal regulator, the Office of the Comptroller of the Currency. Once a bank has that charter, it's directly supervised by federal examiners. The FDI insurance, the lending, all of it sits with that institution. With a charter, a bank can hold deposits and lend against them. They don't need some other bank's permission to do that. It can offer things like Zelle and other payment networks that aren't available to just anyone. It controls its own product and doesn't have to ask another bank for permission to offer a different product. It gets to offer FDIC insurance on customers' deposits directly without going through a middleman. Basically, a charter means you're not renting space in someone else's bank. You are the bank with all the control and responsibility that comes with it. A fintech, on the other hand, doesn't actually hold money on its own. Companies like Mercury, Relay, Brex, names you've probably heard of, built a really great app. Smooth sign-up experience, great online banking. But behind the scenes, your money is sitting in a chartered bank that you've probably never heard of. Mercury uses Choice Financial Group and Column Bank. Relay uses Thread Bank. The fintech is the front door, the real bank is the vault in the back room. Now here's the part that actually matters to you. Signing up is actually where things start to look a bit different between fintech and chartered bank. Most chartered banks still want a branch visit for an account sign-up, especially for a business account, and especially if you're not a US resident. Some chartered banks do offer remote account opening. Really depends on the bank. A fintech, on the other hand, was built from day one to bypass all that and be a fast, easy sign-up. Remote sign-up. Fast approval, no branch anywhere in the world. And that ease of getting started is the #1 reason why fintechs took off so well with international founders. Once you're actually using the account day to day, the differences between a fintech and a chartered bank are not so different. Moving money, paying bills, very similar. So if account opening is easier with a fintech and day-to-day banking is quite similar, why does it matter which one you pick? There's a couple of reasons. A chartered bank can lend against your deposits directly, business loans, lines of credit, the kind of relationship lending that comes from a bank knowing your business over time. Most fintechs can't do that themselves because they don't hold your deposits. Their partner bank does. If you ever want a real loan, you're better off having an account with a chartered bank than a fintech bank. A chartered bank also tends to offer a wider, more stable set of products over time because they're not relying on a partner to give them permission to offer these products. And a chartered bank has one clear point of accountability. If something goes wrong with a fintech bank, sometimes it's the partner involved and not the actual fintech bank. We've got 2 points of weakness there potentially. Figuring out who's actually responsible for a difficult situation can get messy. That's what happened with the Synapse collapse of 2024. None of this means fintechs are bad. They're actually pretty hard to beat for easy sign-up and smooth day-to-day banking. But it's worth knowing what you're trading away for that convenience. Fintechs are regulated too. It's just one step away with their partner bank. And that's the real distinction. Even though the federal rules for verifying who you are to open your account are the same for a fintech or a chartered bank, the way they apply these rules is different. Here's why. Federal law says a bank has to verify your identity and your business through reasonable means. It does not say you have to walk into a branch and sign a wet signature onto a paper. A lot of people assume traditional banks require that in-person visit and fintechs don't. That isn't the actual law, but it is how it ends up being in practice, quite often. It's a choice each institution makes about how careful it wants to be. A chartered bank is being watched all the time directly by federal examiners on every account it opens, so it tends to be conservative. A fintech, until very recently, has been a software company first. The actual compliance decisions happened one layer back at the partner bank. A fintech onboarding hundreds of thousands of customers a year, fast, just doesn't catch every nuance that a federal examiner would. That's not a criticism of a specific company. That's just the nature of that business. Speed and scale were the whole point. So there's the same rules on paper, but in practice, there's a different level of scrutiny. And that gap is where things can go wrong for people using a registered agent address, a virtual address, or just a mailbox. It might sail through the fintech bank's fast onboarding. It's far more likely to get flagged the moment a chartered bank or the federal examiners reviewing the accounts take a closer look. Mercury, one of the most well-known fintech banks in the world with over 300,000 customers, is an interesting case of a fintech bank starting to turn into a chartered bank. In April 2026, Mercury got conditional approval to become an actual bank, Mercury Bank, a federally chartered FDIC-insured national bank. Once that charter is finalized, Mercury inherits all of that direct federal supervision itself. Same company, same app, but the scrutiny behind it is going to be a lot more direct. To be clear, nothing has happened with existing Mercury accounts. There's no indication that anyone's account has been flagged or will be in the future. This is still in progress. Mercury is in what's called the organization phase, working towards being a chartered bank. The point isn't that something bad is happening right now. It's that once that scrutiny moves closer to Mercury in-house, the standard for what counts as a clean, verifiable account is more likely to get stricter than it's been under the old partner bank setup. But here's the bigger point, whether you bank with Mercury or not. The legal bar for verifying your business or your personal account is the same everywhere. But the actual caution applied to clear that bar is not the same everywhere. And it's not just Mercury. Revolut, Nubank, Bunk, and a handful of other well-known fintechs have all either applied for or already received a real bank charter in the past year or so. Charter applications to the OCC have exploded in the last little while, with more applied for in the last year and a half than in 4 years previously. The reason is pretty simple. Federal regulators have become a lot more open to approving these fintech banks to becoming charter banks. Fintechs are taking the opportunity while it's there. So that gap between fintech and charter is closing for many banks, not just one. So what do you actually do with this? If your Wyoming LLC or other US entity is banking with a fintech, don't panic, but don't assume that everything will just stay the same in the future. The businesses that sail through any review, fintech or traditional bank, are the ones that have a verifiable commercial address tied to their business in the US. Registered agent addresses and virtual addresses, post office boxes are exactly the thing that raise flags and get more scrutiny. That's the problem we built micro office solutions to solve. A real commercial address tied to a small square foot office in Casper, Wyoming in our business center, backed by a commercial lease. Give us a call or check out our website if you want to learn more about our little micro offices.